Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. I am Andrew Hall. Joining me today, Ben Nye. Ben, how are you?
I'm doing well. New setup.
Yeah, very new setup. We've got the new camera that we've talked about a little bit. Garrett, show everybody what that can do. Zoom in, do all that stuff. He says he didn't want to, but
On your face.
we paid a lot of money for this, so it better work. Let's get in on that money maker. So we're messing around with that. We've also got the microphone set up, so hopefully the audio quality is a little bit better. If you've been listening on iTunes, thank you for bearing with us. I think it's going to be a little bit better moving forward. If you've been watching on YouTube, should be pretty gold right now. Also, if you're watching live on Periscope, ought to be pretty well taken care of. Ben, today we are here to talk about company that everybody likes to talk about. We like to talk about it. We've done it before. It's always a hit with the fans out there. We're talking about Google. Got earnings coming up on the 27th, so what, 2 days from now? That's Thursday. Yep. Thursday the 27th. Got earnings coming up. We posed the question kind of blindly on social media, can Google quote-unquote rebound from earnings disappointment a quarter ago? What's your gut reaction? And the follow-up question is, does that even matter?
Yeah, I mean, when you're looking at Alphabet, a lot of companies say they don't manage to quarterly earnings report, but with Alphabet, that's especially true. Mm-hmm. You can just see wide disparities in where they come in relative to expectations, and it makes it difficult to model. And ultimately, what you want to see from them is that over time they're growing revenue at a good clip, and hopefully they're increasing the rate of revenue growth. So in the first quarter, what happened is they took this big, I think it was a $320 million charge on an equipment charge. No one really knows exactly what that was due to, but the speculation is that that's related to some of the fiber assets that they installed. So it looks like they took the charge. They missed earnings estimates as a result, and so now the question is what happens in Q1. There is a concern that wages are going to be rising from the new year reset, and that could pressure the net earnings number. And then obviously you have the X factor about what happens with revenue. So there are a couple ingredients in that: paid clicks, cost per click, and I'm sure we'll talk about that.
Yeah, so let's just jump right in exactly to that. We've talked about paid clicks before here, cost per clicks. Those are really two levels of analytics that we look at. They're very surface level. They'll dominate, I guess, kind of the prepared remarks or the conference call, whatever you're really paying attention to. Ben, give everybody a quick, rundown on when we talk about paid clicks and we talk about cost per clicks. What are we actually looking? What do those numbers actually mean?
That's a good question. So paid clicks are the number of times someone clicks on a Google ad. In case of YouTube, there's a certain point of how long you've watched a certain ad for, and then it counts as a click. I can't remember the exact time, but it's based on a time. You don't have to watch the entire YouTube ad in order for it to count as a click, nor do you have to count on any embedded links within the YouTube ad. So that's what a paid click is. Then you have the cost per click, and the cost per click is how much Google is getting paid for every time someone actually clicks on one of their ads or watches a YouTube ad. So those two ingredients combined compute and work out to essentially the revenue, the advertising revenue for Google. So it's always a mystery as to how what the baseline actually is for paid click and cost per click, but each quarter Google will go around and tell you how much in terms of year-over-year comparison as well as quarter-over-quarter comparisons, how those have changed. And what we've seen is cost per clicks have continued to come down. Part of that's a shift to the mobile devices. Paid clicks have continued to accelerate to the upside. So what I'd recommend is you go back through Google's earnings results, index them at some point in time back in the past, and then model them out based on how they evolve over time every quarterly earnings report, and look at it that way. And I think, from what I've done, from the data I've looked at, paid clicks have vastly more then compensated for the cost per click decline.
Yeah, that's something we've talked about before. I know even some of the earliest podcasts that you and I did together right here, I can remember being in the old studio and going through, kind of what leverage does Google have left to pull? What can they do? How can they adjust these pricing? What are we actually looking at analytics-wise? How efficient are they? How are they, really making things work for advertisers? So that's certainly been a theme that we've talked about. Another thing we've talked about really is that number going up. Some data from WPP suggests that we could see revenue go from $5 billion to $6 billion on the ad side for Google. But another thing we're going to start to really look for is kind of advertiser engagement and what they're getting out from that. Ben, what are your thoughts on advertiser engagement? How is Google going to, kind of evolve on that level?
Yeah, so one of the big concerns for Google is that actually having transparency and measurability with respect to the ads that are seen on the Google platform. Concern with a lot of these internet names, and WP pointed this out in their March 3rd call, and that concern is that people are spending all this money on internet advertising and they're not, especially the big guys, your GMs of the world, your Procter & Gamble's, they're spending all this money and they haven't really been able to quantify precisely, exactly what the results are to their top line. They know the metrics that Facebook reports and Google reports and how that evolves, but at what point does the conversion to a click-through, does your click-through rate actually convert, or the impressions actually convert to more product being sold? And so that's a key that the big advertisers are now looking to see as kind of the next iteration of the internet advertising space.
And that's kind of on a more soft level, I guess, softer level, when we start to talk about headlines and what we saw over the last quarter for Google. It is up for the year, year to date. It has gone up, probably not as much as some tech names. We talked about that a little bit in our very important pre-production meeting before we started this broadcast. But we touched on that a little bit, just you and I. So it's up. It's not up a ton. Obviously, a down quarter that happened this calendar year, at least in terms of reporting, had a little bit of an impact there. But one of the softer stories, I would say, softer both in terms of what was being talked about and discussed, but also softer in terms of, in my opinion, its impact, was advertisers pulling ads from YouTube because there was objectionable content. I think they were singling us out at Tusk Media because we're the bad boys of financial podcasting. What can we say? But people were basically, a couple big name companies pulled their ads, said, hey, we don't want to advertise on YouTube. Start drilling down into YouTube itself, not necessarily huge profit center by any stretch for Alphabet or for the Google enterprise, so to speak. But what's the read-through there? Because my interpretation should be that, hey, this story that maybe looked really great on listicles and big things as to why you shouldn't like Alphabet and why you should be against the big man, so to speak. I think there's a great opportunity for Alphabet to just squash that, say that really had no impact on our quarter.
Yeah, I think that's probably you have a good chance of seeing that. With Alphabet, YouTube is a solid generator of revenue, but they keep putting the money back into the business, so it doesn't really generate much on net. So you could see an impact there, but I really didn't expect the impact to be fairly muted. I don't think that these companies yanked ads for a considerable enough period of time that it's going to make a material impact. What's going to make more of an impact, I think, is just the general improvement in the economy and where people are now feeling the ability to actually go in and invest more in marketing and really drive that demand higher because they see their competitors doing it and they don't want to miss out. I mean, it's exactly the same as investing. If someone down the street is buying stocks and making money, you want to get in on that. If someone's advertising, if you're a GM and you see Ford advertising and they're selling more cars than you want to get in on that. Car is probably not the best example because that's probably the one industry that's been pressured so far this year. But you get my point.
Yeah, and I think that's something definitely to keep an eye on. It's kind of that macro component. It's Tuesday, April 25th, as we're recording this. Second day in a row in which we've had the markets up more than 1%.
NASDAQ all-time high.
Right? NASDAQ at an all-time high. Dow back over 21,000, 2117. Just this live commentary. We're reading numbers live on air, which is incredibly compelling, I think. But a lot of what's been driving that really has been earnings. And some strength there. And I think that certainly lends itself to Google, this macro story, this idea spending money. And I think what's maybe most compelling there is, from our standpoint, the economic growth that we've seen broadly. We've obviously seen market appreciation from, the trough that we saw, late 08, early 09.
Right.
Obviously, there's been market appreciation, but I think a lot of people would argue, and I think we might be among them, we're actually starting to see, really, really, really strong economic indicators starting to kind of align for the most part. So when you start to put that together, and then you look at the age of Alphabet as a component, that's what makes this a really compelling story to me, because all of a sudden we're saying, hey, for the first time since this has really been the dominant player in the internet space, people are actually going to have money to be pouring in. And not to say that corporations haven't been making money, that earnings haven't been there, but we're starting to really see that lift off potentially.
Yeah, and advertising is cyclical. I mean, advertising is not just going to continue to go in a straight line one way or the other. So a lot of people say, well, advertising is cyclical, so you got to stay out of it. But when the economy is strengthening, that means advertising spending is likely strengthening as well. So that, I think, bodes well for Google. The other thing to bear in mind on Alphabet is just how much geographical diversification they're getting. And one of the things that has stood out in the year to date is, yes, the U.S. economy appears to be improving and potentially accelerating. But even more than that, even more clear than that, is what's happening in Europe and the rest of the world. And there we see a much more dramatic stabilization. Both, companies that have been reporting are saying, I was looking at Philips Healthcare the other day, and they said that Europe was actually a source of strength, and then the U.S. was kind of mixed, which is a departure from what we've seen in the past. So you could see some improvement in Alphabet's business in that regard as well.
Last question I have for you, and it's somewhat open-ended, but one of the challenges I see with Alphabet, which again, full disclosure, we own Alphabet. We own quite a bit. We own Philips, which you just mentioned.
Yeah.
I don't know if there's anybody else that we own, because I don't know if we've mentioned many companies, but Ford and GM.
Procter & Gamble.
Procter & Gamble. So we own pretty much everybody we've mentioned. But one of the challenges I see as an investor in Alphabet is what I would almost call a value versus growth purgatory, so to speak, where it seems like, the headlines that we always see are geared towards the growth. Oh, the growth is slowing, growth is accelerating, we didn't get the growth we wanted, we got the growth we wanted, whatever it may be. Growth-related stories really drive this company. And yet we're still seeing, I would argue, something of a discount relative to a traditional growth multiple when you look at the giant and the size of what Google is. So it's trading almost between where you would expect a value stock to be and, a mega cap blue chip company and where you would expect a growth company to be. So it's kind of in that purgatory. Is that a challenge for them to either define themselves as growth or as value, or is that an opportunity because, hey, they are a growth company and they're not being valued there?
Yeah, I don't think we're seeing the accelerating growth. You have over the past few quarters seen a bit of a stabilization. You had, 2014, 2015, which was a little disappointing in terms of the growth rate. But then you have that re-acceleration back up to this 20% range, and WPP is talking about 20% increase in advertising spending to Google this year. So you have those factors, and I don't think we're seeing the acceleration, but by that same token, I don't think we're seeing a deceleration. So from my perspective, I still continue to view Google as, a growth at a reasonable price company. And by that I mean, especially if you strip out cash, the earnings multiple that you have on Alphabet is actually fairly reasonable, especially compared to the growth rate that we're seeing, and the monopoly that they have. It's just going to be incredibly difficult, to my mind, for a company to come in and take a lot of that search share. You might have a competitor come in, but for someone else to replace them as the exclusive search provider for a lot of people. I never use Bing or Yahoo, and I think people who do use Bing or Yahoo would also probably use Google. I don't see people, using Bing or Yahoo exclusively.
No.
And that's just going to be very difficult to compete
I honestly
with.
forget about Bing.
Yeah.
And but that's a testament to what Alphabet's built with their search giant, because it's not like, Bing was some lowly startup.
Yeah.
It was backed with tremendous, technology and financial support from Microsoft, one of the biggest companies in the world.
And interestingly, as you look for a competitor to Google, in that same call that we keep referencing, the WPP call, Martin Sorrell, the CEO, is actually talking about Amazon as being the most likely competitor to Google in search, which, take that for what it's worth, but people are stretching, because I think that's a stretch when you talk about competition that's going to come in and compete away Google. So you have this entrenched market position, reasonable multiple, large cash balance, and a revenue growth story, and I think that helps to explain why the stock's been up and potentially why they can beat earnings and move forward.
Very good. That's all we got. This is the Investing Podcast. Real quick, hit subscribe on iTunes. Follow us on Twitter at Tusk Media LLC. We're on Facebook.com/Tusk Media LLC and YouTube.com/ you guessed it, Tusk Media LLC. If you're in Seeking Alpha and watching this, leave us some comments, ask us some questions, and we will talk with you there. Have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.